All right. Good afternoon, Checkmate crew. Today is Wednesday, July 20th, 2022. It is noon here in New York City. Hopefully you all had a good morning. Let's just get right to business, okay? Today we are seeing a little bit of a continuation of dollar strength. All right. I think that's what's on everybody's mind. Yesterday, I said that I would get out of all my kind of risk-off sentiment options plays. So that's all my puts on all those indices, plus the call spread on UVXY. I said that I would be exiting if the dollar fell below the 18-day moving average, if it closed below that, and it has not, and is using that as a pivot. Remember, I said that yesterday. I said that it's very possible that the dollar uses this 18-day moving average as a pivot. Okay, it's just something that I've noticed. I'll use something until it stops working, and so far it's worked. Especially around here, it has worked very well. I know, too, you all are also noticing that the bottom 2 standard deviation Bollinger Band is also acting as a pivot if this fails. That is very true. Back here in May, the distance between the 18-day moving average and the 2 standard deviation Bollinger Band was actually quite low. So, that wasn't that of a difficult hold. But this distance here, right now, between the 18-day moving average and the bottom 2 standard deviation Bollinger Band, that's quite high. That's like, what is that, from 106.49 to 103.52. So that's like almost 3%, right? Yeah, that's almost 3%. And that could definitely fuel a huge rally. It could probably make the S&P 500 rally all the way up to June highs, that 4150 zone. So definitely, I don't want to be holding anything if it loses this pivot and it wants to start testing that 2 standard deviation Bollinger Band. I definitely do not want to stand in the way. All right, even if afterwards the big trend may continue. We can always re-enter then, right? There's no need for us to hold all the way down for all of this, okay? So again, this is our leading indicator right now. It's the dollar, okay? It's the euro, all right? Also, shorter-term bonds and our junk bonds advanced decline line, all right? Those are our 4 indicators that we are looking at, okay? As far as what those indicators are saying, so dollar is up today, euro is down, so those are bearish right now. So for today, they're bearish. Again, this long term, let's just look at the big picture, okay? Let's look at the big picture first today. Big picture is dollar is still in an uptrend. Yes, we had a little bit of a correction, and the worry was, well, what if it continues? What if the dollar just keeps going down? Well, that's not happening. Today we're bouncing. So is it possible that this is just a dead cat bounce and it comes down? Definitely possible. But again, we would want to see that confirmation before we act upon that, right? All right, we don't, we want to see confirmation. There's no need to guess, okay? We can just see the market and act accordingly after the market tells us what it's going to do, all right? So there's no need to guess for that. If it breaks this, we will know. It will go down below the 18-day moving average. It will close below that, and then we can manage risk accordingly, okay? But the big picture, dollar still in an uptrend, okay? Euro USD still in a downtrend. Yes, we saw a little pop. Is it possible that it can go up to like 106, 107? Yes, it is. But if it doesn't happen, I mean, it could just curl back down. So again, we wait for that confirmation. Okay. Our junk bonds AD line is starting to flatten, and we have now made a higher high on our junk bonds AD line. Again, let me say that again. We have now made a higher high on the junk bonds AD line. It's starting to look bullish on junk bonds. Okay, it's starting to. All right. It would really, in order to negate this, it would need to, when the AD line drops again, it would need to make a new low, a lower low. Okay, if it makes a lower low, then yes, that will be negated. All right, but for now, we just made one higher high. Okay, one higher high. So let's, it is what it is. All right, it's starting to turn bullish, but that doesn't mean it's bullish yet. Okay, I will remain neutral until the market tells me otherwise. Okay, I will remain neutral. All right. Today, a lot of that dollar strength is actually coming from, guys, and I saw a lot of you guys talking about the dollar. Always remember that currency pairs, or anything for that matter, is always in pairs. Okay, it's the dollar compared to something. All right, so right now the dollar compared to most of your emerging market currencies is advancing. The dollar is advancing against most emerging market currencies, and this shows you right here. All right, so our EEM puts are actually doing well today because of this as well too. Usually dollar strength is not good for emerging markets because most debt is denominated in dollars, and whenever the price of the dollar goes up, it becomes more expensive to service that debt. So it hurts the cash flow of most of these foreign companies. All right, so that's the reason why that was one of our original thesis for entering the EEM puts. Okay, always remember it's a pair. So even when you buy a stock, let's say you buy one SPY share, the SPY is the S&P 500 index. When you buy that, what you're really doing is you're buying a pair. You're buying the SPY dollar pair. You're long the SPY share and you're short the dollar, right? You're selling your dollars to buy that SPY. You can think of it that way, okay? And when you have SPY and you sell it to get cash, well, then you're buying cash and you're selling shares. It's always a pair. Okay, it's always a pair. So when you talk about the dollar and when we talk about dollar strength, yes, there's an index that kind of takes into account all the major currencies, but you also have to look at those individual components. Sometimes a major pair may act differently than all the other pairs with the dollar. So that's also possible. Okay, so always keep that in mind when you're talking about dollar strength or dollar weakness. It's always based on compared to something else. So always kind of have that frame of reference in mind. All right. Speaking of dollar pairs, since we're talking about this already, I said if you buy SPY, like our S&P 500 index fund, it's a pair. You're buying SPY and selling dollars. Well, what if we were to price the S&P 500 in euros? Okay, get rid of that dollar noise, so to speak. All right, and if we were to do that, if you actually price the S&P 500 in euros, we're actually at June highs. Imagine that. We're at June highs. If you get rid of that and you just do SPY in dollars, here it is. Because as dollar gets more and more expensive, all right, you need less of it to buy those shares. That's why the price is lower, right? Your dollar has gained so much more that you need less of it to buy the same amount of SPY shares. So it's only natural that it is a little bit lower than a weaker currency, at least weaker in for the last midterm, to priced in euro. Okay, so since the euro is not doing well, you need more euros to buy the same amount of SPY shares. So that's why the price is higher. Okay. So if you price this in euros, we're already at June highs. If you actually price some of the other indices, okay, and this is a great exercise, by the way. Oops. No. Why is it? Oh, here it is. Okay, if you actually look at the Dow Jones actually went to its high and then it's coming back down. So it is even priced in euros, it is the weakest of the indices. And again, this is something that we predicted based on the IVW to IVE chart, the growth versus value chart. We saw this uptrend, and remember I said if you're going to go long on the market, you should go long on NASDAQ or tech stocks. Didn't I say that? Well, yeah, this is where it comes from, okay? And so, again, and it's actually playing out. We called it exactly that, yeah, the Dow Jones will be the weakest index, and it is even in euros. That is the case, okay? And also, if you look at the NASDAQ, priced in euros, it is actually breaking above, it's breaking out actually above those June highs. So again, this is a big if. If the dollar breaks down and goes to these levels, if the Euro USD goes to that 106 level, all right, I think very good chance that QQQ or the NASDAQ index, you may see that going over those June levels. It's very possible if, okay, that's a big if. Again, you have to have the dollar drop for this to happen. If you see the dollar drop considerably, I think it's very possible that we see a little bit higher than the June highs, just based on that euro, just based on the euro pricing of the NASDAQ, of that chart. Okay, I think the charts will start merging. Okay, they will actually start looking similarly if the dollar starts dropping. Okay, so just like this, how it's breaking out above its June highs. I think if the dollar drops, definitely we could see maybe around here, maybe even like 320, 330-ish on the triple Q. All right. SPY, same thing. It could, on the S&P 500 priced in euros is right at our June highs. Definitely if the Euro USD goes to 106 or the dollar index drops to 103, 102 zone, definitely I can see SPY going to that 416, 417 zone. Definitely. I can definitely see that. All right. SPX, same thing. It would go back to those June highs. All right. So that's if the dollar drops. All right. So that hasn't happened yet. So don't take it as a prediction. Okay. Just anticipating what could happen if certain conditions are met. All right. Just something to look out for. All right. Since we're on the indices, since we're on SPX, again, big picture, we are still in a major downtrend. Okay. The major downtrend is still down. However, we are starting to see higher lows. Well, this one made a lower low. Yeah, this one made a little lower low, but we're starting to see higher highs at least. Okay. We have the ECB meeting coming up tomorrow. All right. For our last ECB meeting, which was on the morning of pre-market June 9th, was right here. Pre-market. Okay, I remember the S&P 500 futures market. We were in the green when the ECB meeting happened, and after it happened, it just collapsed. The market just collapsed. Okay, will that happen here? Possible. It's very possible. When this happened too, I don't know if you guys remember, but also in the same time period, we also had the Swiss central bank come out with an announcement, a surprise announcement on their rate hike as well too. So that caused a dash for cash. The Swiss franc is considered a safe haven, and so now that their interest rate is not as negative, I think they went from a negative rate to 0. All right, and so it just made getting into that safe haven that much more attractive, okay? And it caused that dash for cash, and that's what we saw here. I don't know if we're going to get something like that this round, all right? But if we do have any, other central bank surprise announcements, that we could very well see that. Actually, ahead of this meeting, even though the expectation is for them to start raising interest rates, we're actually seeing the euro fall back a little bit today. Okay, generally interest rates going up is bullish for that currency, because now you can buy that currency and deposit it and get more interest because interest rates are higher. But perhaps this was pricing in that. Maybe the last few days was pricing that in, and now it's tapering off. And then whatever's new, the new expectation is after that announcement, we'll see. We'll see what the market's reaction is to that. Whether it's good news or bad news, it really doesn't matter. That's just noise and nonsense. It's really about what is the market's reaction to that event, okay? It's not about good or bad. It's about what's the market's reaction, okay? Because it could be good news and it could be sell the news, right? It could be bad news, but it's all baked in and it goes up, right? Then you're talking about like a 3D chess game, right? A 3D, 4D chess game. So, instead, just wait for the market's reaction and then we can act accordingly, okay? Don't try to front run all of that, okay? Because then you're just guessing. You're gambling at that point, all right? Wait for that confirmation, okay? And we will get that confirmation, all right? We may not be able to do anything about it, just like here. I mean, what is it? Back in June, when it sold off, that was really quick. After June 9th, that sell-off was really quick. Most professionals were caught off guard on this because it changed so drastically. Oh, by the way, next week is our FOMC. So, so even if we do get a reaction out of this ECB meeting, we might have the opposite reaction after FOMC. So you never know. And that's only like, 4 or 5 sessions later. Okay. So, again, being patient and sitting tight is a trade. Remember that. Okay. But anyway, so yeah, I digress. I'm getting off topic here. Okay. Big picture though. All right. Big picture. Let's look at some of our other data points. Okay. Let's just consider what else is going on here. Commodities, gold, silver. The gold copper ratio still giving us that risk off sentiment, that risk off signal. All right. It's still up. It's in an uptrend. This is the commodities market way of saying, is the world in risk off or risk on mode? Okay. Risk on would be this coming down because people are more interested in industrial metals like copper. Whereas in risk off mode, people are more worried about the store of value rather than industrial production. So that's why gold outperforms copper during those times. Okay. But right now, this is a risk off signal. Okay, not one of our major indicators. Again, I think the biggest indicators are going to be gold. Not gold. The major indicators are really going to be the dollar and the euro. The dollar and the euro. Really, those are the two biggest indicators. And then the next would be the junk bonds A and D line. The ZF, the 5-year Treasury note futures. The reason why I'm using that is because if we see a bid on those 5-year Treasury bonds, then what we could see is a steepening of the yield curve, okay? So that might also attract people to buy shares and possibly take some profit on their dollar longs, okay? So that's the reason why I also have the ZF. But that ZF indicator is actually tied to the dollar. So in the end, it's still about the dollar. Dollar, euro, junk bonds, A and D in that order. Okay, that's the most important things. TIP, TLT, up again. Okay, so we're still in this no man's land. We're still chopping up and down. I think the next couple of CPI reports and then the next Fed meeting, I think this we might see a big move then. We'll see. But right now it's still chopping around that level. All right. 10 and 2 still being inverted. It's barely green today, barely, but we're still inverted. All right. Let's look at the more longer term 30 and 10. 30 and 10. 30 and 10. This is the 30 and 10. It is actually inverting more. Okay, the 30 and 10 is coming down. This is not a good sign. Okay, generally though, this signal is really early. Okay, so we may see something maybe in the next few weeks. Maybe we see some more volatility. I'm not sure. Okay, I would like to see this make bigger moves down, and then we could say, oh yeah, volatility is on the horizon. Okay, but right now it really is just grinding down little by little. Okay, it's just grinding down little by little. IVE still growth outperforming value. If I were to be inclined to go long, if one is inclined to go long in this market, go long on tech. Remember how we did a short, not a short, but a very, very short-term long position on Baidu. Remember those call vertical debit spreads we did? Partly the reason why I chose Baidu is also because it's tech, it's growth, okay? So those are going to outperform. This is really telling. And that's also the reason why when I did leg in a little bit into a U.S. index put options, I chose the Dow Jones. Because if I was wrong, I was going to be wrong by less. Which turned out to be true, but still could have timed that better. But I'll go over those positions later on at the very end. But yes, right now it looks like growth is outperforming value, and that is probably going to be the case probably for the rest of the year. So if one is inclined to go long on tech or NASDAQ. Okay, growth. This is the Euro charts. I also want to take a look at emerging market. Actually, do I have this? Emerging markets. Yes, I do. So today, again, I showed you guys that the pairs, the EM pairs with the dollar, CEW is down, so it's coming back down again. Hopefully, we see EEM also curling back down. We shall see. It's already, remember how I told you guys a couple of weeks ago, already in Sri Lanka, countries like that, they're already doing energy rationing. The president of Sri Lanka actually had to leave because rioters stormed his palace and they started, vandalizing government buildings. They're in the process of choosing a new leader. We're also seeing some political theater now in Italy, where Italy is now worried about the upcoming tightening of the ECB. Italy is one of those countries that has lots of debt. Italy, Spain, Greece, out of the Eurozone countries, they have the most debt. And as the ECB raises interest rates, what is going to happen to countries like Italy, Spain, and Greece? A country like Germany can handle that. They're more productive. They have more economic output. But how will a country like Italy fare? So right now, those are some of the questions that are playing out in Italian politics. Some interesting stuff. I invite you guys to read that on your own. But anyway, the point of all that is that usually that's how these international credit crunches, this is how they start. They start with one or two countries, okay? And again, I mentioned to you guys the cockroach theory. You see one cockroach in your kitchen, there's most likely going to be more, okay? If there's one problem, there's probably a lot more problems, okay? If you notice one problem, there's probably a lot more, right? So, it always starts like that. It always starts with a handful of countries, and then more get added to that. And all of a sudden, then it becomes a global issue, and then that's when the media starts talking about it, okay? So we here at Checkmate Trading, we like to think 5 or 6 moves ahead. So we are anticipating this coming down. And again, we have those March puts. Right now, they're at around break even. I think they're more break even because of the spread. The spreads are so wide today. But I think if those spreads tighten, actually, we might be even at a slight profit right now. Okay. So again, we're just waiting. We're waiting for that to curl. Now, none of my positions are that large. Although I've been adding to my positions, I did add to FEZ, which is the Eurozone Index ETF. I did add to that. So just keep that in mind. I did add some more of these November spreads. All right. That's probably all I will do for today, okay? The plan still remains for me that if the dollar closes below this 18-day moving average, I'm getting out of all risk-off put plays, and also my UVXY call spreads. I'm just getting out. So it might be even today, it might be, but that's just my trigger, okay? So keep that in mind, okay? One more thing too. This is something we haven't looked at in a while. I know back in June, I showed you guys this. I think it's worth revisiting right now. Just another piece of data that I use to determine the nature of a bull or bear cycle. So right now in this bear cycle, this is the New York Stock Exchange new highs versus new lows. It's a breadth indicator. How much of the stock market is actually participating in this rally, right? Generally, when it's the end of a bull market, when it's the end of a bear market, we want to see this line curl up above these moving averages. There's the 29 and 4 exponential moving averages. We want the actual high-low line to curl up above all that. We haven't seen that happen this whole year. It flattened out at certain places. It flattened out back in March, April. It flattened out in the end of May and early June, but it never curled up, okay? That really is a high-quality signal that, oh, hey, this is, we're getting to the end of the bear market, okay? And that this rally does have some legs, okay? That's when we'll see that, okay? But it hasn't happened yet. It's actually still going down. This is the cumulative line. If you want to take a look at what happens every day, this is what happens. It's still in the negative. It did make a new higher high, though. It's not as negative as where it was a couple weeks ago. But it's still negative. So it's subtracting. It's actually making this line go down more every day. As long as this is negative, the cumulative line, all of the points that this quotes, if you were to add them all together, it keeps going down. It's like our AD line, our junk bonds AD line, but instead it uses new highs and new lows data on the New York Stock Exchange stocks. Okay, so it's still going down. All right. So that's why I'm not convinced. That's why even though we have indicators that are saying that maybe this bull market may have some legs, that's why I'm still remaining neutral because of this. Also too, again, big picture, yes, we did see the dollar retreat, but it's now starting to bounce up again. So if this starts bouncing up again, well then the dollar and the euro are back to bearish indicators. Okay, they're back to bearish. The AD line, the junk bonds AD line is neutral, and our ZF is bearish. So if this bounces up again, now we have 3 bearish indicators and 1 neutral. And I figure that if the dollar bounces and the market actually goes down, I would guess that the junk bonds AD line would turn negative too. So then it would be 4 bearish indicators. So it's not like we're out of the woods. It was just looking like the setup was looking like that it could turn bullish. But now with this bounce, we don't know anymore. It may go back to being a bearish indicator, okay? And again, this is a high quality signal as well, the high-low line. This generally needs to turn up to see an end of a bear market, or at least for that season, or at least for the next 6 to 9 months. If you want to see a rally that lasts for months, this needs to go up. If this doesn't go up, rallies tend to be short, okay? It tends to be that way, okay? So just keep that in mind. You can copy this yourself and chart this yourself if you want. Okay, here are the settings that I use. All right. Let's get to other things. Well, I almost forgot, but this is very important. Last but not least, Bitcoin, cryptos. I mean, wow, guys, what a rally! What a rally! So much for being patient, eh? You know, I always say patience pays, right? Well, sometimes I guess it doesn't, right? Remember how we were going to buy and start legging in when it gets to that red line? This is the Bitcoin to gold ratio. God damn, we should have just went in, right? We should have just went in. You know, chasing this would have been, you know, and I keep saying that Murphy's Law, right? It's just Murphy's Law. Whenever we get aggressive, and you know, we try to be quick with the market likes to take its sweet ass time, but then when we're being patient, the market wants to move fast, right? It is what it is. That's just part of life. That's part of trading. All right. More often than not, though, patience does pay, and it's just better for risk management overall, just to be more patient. Yes, you do end up missing a lot of trades because of that, but you know what? Sometimes it's worth it. It saves you from large losses. So, would I love to see this drop? Yes, so that I can leg in. But it is what it is. Okay, it's not about what we want. It's about what the market will give us. Okay, so the Bitcoin is going up right now. It's because there's a lot of call chasers. Let's actually go through Bitcoin right now, and then. Also, too, today we're also going to go over Ethereum, all right? One of the things that I went over yesterday on our Discord was that I actually think, my new thesis now is that I think Ethereum may be more affected by its options trading than Bitcoin, and here's why. Bitcoin has about twice the actual crypto coin itself, the physical Bitcoin itself, has about twice the volume on a 24-hour basis than Ethereum does, okay? However, the notional value of all the open interest on Deribit, and Deribit has 90% of the open interest on Bitcoin and Ethereum options trading, okay? 90% is on Deribit, okay? So the notional value of all the open interest on Bitcoin is about $5.4 billion. But if you look at Ethereum, the notional value is 5.2. This was at 4.9 billion last night. So there's a $300 million worth of options just got into the open interest. Just in the last 12 hours. Oh my goodness. This was 4.9 billion literally when I did this last night. When I was preparing this last night. That last night early this morning. Okay? So obviously we're seeing a lot more interest. Anyway, the difference, the notional, it's almost the same now. It's almost the same. Wow. Oh my God, this blows my mind right now. It's almost the same, but it's got half the volume on the actual coin itself. So this market, Ethereum, may be more affected by options trading. So going forward now at Checkmate Trading and here at High Noon Highlights, we're going to go over the Ethereum options chain as well. Okay, we're gonna go over that now too. All right, but anyway, I just wanted to show you guys that. But anyway, in Bitcoin right now, we're just seeing a lot more call chasing. Okay, earlier in the week, everybody was chasing the 22,000 calls. All right, then they were chasing the 23,000 calls. Then last night they were chasing the 24,000 calls. Now, guess what strike they're at? They're at 28,000 for July 29th. Okay, 28, 26, 25, 28, those strikes. So they're moving up strikes, and they're also now going a little bit out in date. Okay, as of yesterday and the day before, there was a lot of July 22nd activity. Bitcoin options, it tends to be that within about a day or two of expiration, they start rolling over into the next week's option chain. That's something that I've noticed is a tendency for the Bitcoin options market. So I think that's what we're seeing. We're seeing people now participating in the July 29th. Still, most of those participants are retail, although block trades are increasing. Remember in the beginning of the week how it was a smaller piece of the pie? Now it's like almost half. It's about 44%. Okay, so block trades are increasing. It is starting to increase on the buy side on the calls. Okay, so calls are being bought. Calls are being bought, and now they're being bought on further out the money calls. Okay, so more order flow. Again, remember we talked about gamma pinning and the potential for gamma pinning. We can't have gamma pinning if there's all this new order flow coming in and it's all heavily one-sided. There's a lot of one-sided order flow happening right now in Bitcoin. Okay, it's mostly in calls. Let's actually take a look at the 29. The 29, this is it. So it's like what, the 28 to the 24 calls. So we're looking at here. Oh wow, look at that. The volumes. That's a lot of volume. That is a lot of volume. And actually, if you look at the OI too, the funny thing is, the big open interest, I believe, on Bitcoin, the big open interest is for July. And now we're starting to see them go to September. But remember how July 29th was the biggest OI for the longest time? So actually, on Ethereum, okay, by far the biggest expiration is September. Okay, and actually September and December are monster options expirations for Ethereum. Guess what else has a monster expiration for September and December? Guess what else? S&P 500. The SPX option chain has a monster September and a monster December options expiration. Okay, so that's kind of crazy. Okay, that's kind of crazy that it matches. It matches traditional finance. It's matching S&P 500. Is that a coincidence? I have no idea. I have no idea if that's a coincidence or it's because it's just general risk sentiment. It could be that it's all tied together. Okay. I think that crypto assets, the big crypto assets, I'm not talking about the shit coins like the Doge or whatever, the doggy coins or the monkey coins, whatever. I'm talking about the major coins, Bitcoin and Ethereum. Okay, I think Bitcoin and Ethereum are starting to get a lot more institutional participation, and it actually is starting to become a valid and legitimized asset class. And so it's only natural then that, with something that has that much risk and growth potential, that you would see risk management and hedging behavior that matches another risk asset such as the S&P 500. It's only natural that they should match if institutions are participating and really hedging their risk on value fluctuation and price fluctuations. So I think it's not a coincidence at all that Ethereum has a very similar kind of options expiration OI build up in September and December, just like S&P 500. I don't think that's a coincidence at all. I think it's the same institutions. They're just hedging for September, and that is when we have our last major Fed FOMC interest rate meeting, is that September meeting. Okay, there's a lot of hedging going on for that meeting. Okay, and I believe, and a lot of institutions, a lot of professional traders that I talk to, they all think that there is a potential for a pivot or a potential for a huge disappointment from the Fed in September. That's what everybody's hedging for in the professional institutional investing world. And so we're also kind of seeing that being mirrored, especially in Ethereum. But wow, look at that volume on this. I mean, this was 4.9 billion last night, and now it's at 5.2. It's almost matching the notional value of Bitcoin. This is quite amazing. Wow, and way more block trades. Look at that. The block trades, there was more block trades. It was flipped. The chart was flipped. It was 40% block trades, 60% regular screen. This is crazy. This blows my mind right now. Oh, look at that. December, 3,000 gold. So already on Ethereum, they're starting to build up OI and volume in December. Again, that's what the pros do. If you look at the S&P 500 and if you look at the hedging that happens on the SPX, I'm not talking about SPY because SPY has a lot of retail. I'm talking about SPX, the big boy contract, the ones that institutions use, all right? You actually see hedging building up 6, 9, and 12 months ahead of time. We're especially in Ethereum, you're seeing that. Look at that, December's, okay? If you go with Bitcoin, I think Bitcoin is more like, I don't know, perhaps retail driven because they're more closer dated. Retail loves closer dated. They love 0 DTEs, weeklies, because the quote unquote potential payout is more and they're cheaper and all these things, right? And that's why retail loves it. It's also the reason why most retail fail. Again, another story, okay? Different story. You know how I feel about that. But anyway, but institutions like to look a little bit more further. They like to they like to position themselves a little bit longer. Okay, so when they hedge, and when they hedge or when they build options positions, they're looking 6 months to a year ahead. Okay, so definitely this, I mean, woof, this definitely looks like institutions. This is what institutions would do. Okay, this is really exciting stuff. To me, this is super exciting stuff. This is great. Bitcoin's boring now. Bitcoin's starting to get boring. Let's look at Ethereum, man. Let's look at Ethereum. Let's go. What's going on for December? This is great. This is some great stuff. Wow. Look at all this volume. So we were looking at the 3000s right here. Look at that volume, the 24-hour volume, and look at that. That's our big OI strike right there for calls here, and there's also one here at 2500. Okay, these are mostly buys. Lots of buying here. So now let's okay, again, we're not reacting one move at a time to the market, right? We're checkmate traders, right? We're anticipating 5-6 moves ahead. Okay. What if we have that year-end rally? Okay. ETH runs up. Let's say it hits 3,000. We start slowing down at 3,000. We start seeing these calls getting unwound. They're starting to unwind. All right. That could be a place where we can look for a place to short, perhaps here at the end of the year. Okay. First, we're going to look for a way to get long after this, after we get a confirmation that the low is in. But then afterwards, we definitely probably want to start taking profits, at least partial profits, probably around 2,500. Okay. Again, if we're going to be looking for opportunities to get long, because I do think we're going to have a rally at the end of the year. That's the play. So getting long on risk assets, it's like the move 2 or 3 moves ahead. After that, where do we take profits? I think 2,500. If you're going to go long on Ethereum, I think 2,500, you should start taking some partial profits and really start accelerating that if we get over or to 3,000. Okay, so if we get to 3,000 or over, that's really when you want to start really minimizing your positions and minimizing your risk. And then 2,500, you can start scaling for some partial profits. Again, now that's like 5-6 moves ahead. Okay, so just anticipating what could be. I'm not trying to predict the future. I'm just anticipating 5 or 6 moves ahead, just like any great chess player would. You don't know exactly what your opponent's going to do, but you still think 5 or 6 moves ahead, right? Just in case if your opponent does what is expected. All right. Puts, we are seeing some puts, mostly though it's in calls. Right now, people are really building up call positions in Ethereum and in blockchain. So institutions are starting to speculate. They're starting to speculate themselves, okay? So liquidity looks like is entering back into the market, okay? When liquidity was looking dismal, we didn't see this type of volume in Bitcoin and Ethereum options. But now that liquidity is trickling back into the market, we're starting to see institutions start taking some long positions. That doesn't mean the bottom is in, guys. Okay, I just want you to be clear about that. We could be seeing a new bottom in about maybe in a month or two. We could see a lower low, very possible. And usually right before the short-term bear cycle is over and we see this mini bull market, it's actually quite common for the market to make this like sudden like wick to new lower lows and then pop back up from there. It's not unusual to see that, okay? Especially in the S&P 500 and in indexes. So keep that in mind, guys, okay? Just because liquidity is entering into the market doesn't mean the bottom is in, okay? That just means that the next bottom, though, is a good opportunity to perhaps try a long position, okay? So again, temper yourselves, okay? Patience pays. Liquidity is entering into the markets, but that doesn't mean the low is in. Okay, it doesn't mean that. It just means, though, that we have a little bit more conviction now to go long if the market drops. Okay, we have now a little bit more conviction. All right, we have a little bit more data on our side. The math is now starting to come on our side in buying that dip. I do still think we have one big leg left. I mean, look at my positions right now. My positions are, I'm about 92, 93% in cash right now. I've kept all my positions really small. I have about, 7 to 8% and different puts, put spreads, and one UVX and a one call spread. But that's UVXY. I have a few call spreads on that, but that's still like a risk off type play. Okay, so all my plays right now are risk off type plays. All right, so just keep that in mind. But I'm still mostly in cash because I don't want, if I'm wrong, I do not want to face a large loss. I want to keep as much of my profits that I've made this year. This year actually has been pretty good to me. Like the wins that I had in April and May and June, they were quite good. So I want to protect those profits. So I don't want to be doing too big of a position. But if we do see a final washout and let's say we make new lows, I will lean into a long trade. Okay, it will be a combination. Again, I told you guys this so many times. The SPY, the 3 and when it goes to 342, I'm going to buy long-term shares. If it goes under 340, I'm going to buy those in-the-money calls. Actually, you know what? Let's just go through our plan. Let's just go through our plan and our positions. Okay, again, positions and plan. Okay, the plan for S&P 500 still. If it goes up to 415, I'm going to buy 3 to 6 month put spreads, okay? If it just goes straight up, all right? If it doesn't, if it goes straight down, I'm going to start buying shares at 342, and then under 340, I'm going to start buying in the money calls, okay? Actually, I thought about this before. I may start legging into shares at 360-ish. Okay, but most of the shares I'm going to wait for 342. Okay, so I am making a slight revision to our buying program. I'm going to start legging into shares, long-term shares at 362 at the previous low. I'm going to start scaling in there. but most of the buys will happen at 342. I'm still going to try to buy in the money calls that are 12 months out under 340. Okay, that's my plan for SPY. All right, for the U.S. indices. What else? Oil. All right, oil. I mean, this is a decent place. I mean, if you really want to, if one were to be really aggressive, you could start buying puts or going short on oil here. I'm still gonna wait for that 110 and 120 zone, just in case if the dollar drops. If the dollar drops really hard, oil could go up to like 115, 120 zone. It could. All right, and so I am going to be patient on oil. Oil can make these huge moves, okay? It can make 8, 12% moves. So I'd rather be patient. I don't want to face a huge drawdown that's going to be very quick. So, you know, in the end, it's all about risk management. So in the end, I still have the same plan. My plan's not going to change for oil. For corn, it doesn't look like it wants to come, but if it goes to 720, I will look to short. Now this has to happen in the next couple of weeks. It's probably not going to happen. We might as well just scrap that idea. What else am I in? Oh, today I added to FEZ shares, or FEZ put spreads. I still have those. I'm still long the 32, short the 27. So this is a vertical put debit spread. I added some more to this. A very good price too. Also, we still are in our Dow Jones Industrial Average put spreads for October. Still long the 300, short the 290. This is the 300 290 put debit vertical spread. I'm still in EEM. All right, for the March 2023 expiration. It tightened a little bit. We're now a little bit in the profit. 39 puts, okay? Still in them, okay? Especially if the dollar goes up, all these could pay out. Still in FXI. All right, FXI, China is starting to get more and more of these issues with debt. You know, their state media is downplaying how much of those late mortgage payments may affect the market. Even Goldman Sachs coming out and trying to downplay the risks. I still think that's over leveraged, especially the Chinese real estate market is definitely over leveraged. So I'm still in our 31.26 puts, vertical spreads, long the 31 strike and short the 26 strike. Okay, I'm still in those. Oh, and I'm still in those small little September naked put longs as well. Again, UVXY still in. All right, I still think there's going to be one more wave of volatility. I have it for December. I'm long the 14, short the 24, long the 15, short the 20. So I have a 14.24 call debit spread and a 15.20 call debit spread on UVXY as well. So that is the plan. When do I start managing risks on my positions? Again, you know, risk management is key. It's all about risk management. You can say whatever you want about the triggers, what you enter with, what TA do you use, what options data do you use, what macro data do you use, but all of that is meaningless if you don't have a sound risk management strategy, okay? It really is all about risk management. All right, your triggers could be really bad, but if your risk management is good, you can still profit. All right, it doesn't work the other way around. Your triggers could be awesome, but if your risk management is dog shit, then you're not gonna make money. Okay, I can guarantee this. You know, trading is a marathon. It's not a sprint. Okay, always remember that, folks. Anyway, I gotta go use the other chart, the chart that has my Bollinger Bands. If the dollar closes under the 18-day moving average, I am out of all my risk off options plays. So, you know, the FEZ, EEM, FXI, DIA, and my UVXY spreads, I'm out. If it closes under this, I am out. Okay. As far as just the FXI and EEM, so China related. EEM is emerging market, but it's got a very large Chinese influence. Has a lot of Chinese stocks in there. I think it's like 20% of it is Chinese stocks. So for this, if the Australian dollar closes over 6903, I am going to get out of our FXI and EEM options plays. Okay, so those are the plays. Those are the indicators. Again, the indicators: Euro, USD, the dollar, and our junk bonds AD line. Okay. All right, so those are our indicators. I just showed you my positions. I just showed you also my risk management plan, also my buying plan for the indices. Boom. Checkmate trading, high noon highlights. That's all she wrote. Okay? Any questions, comments, rude remarks? This is your time. Going once. Going twice. Sold. Okay, all right. We're very well then. In that case, if you're joining us from Twitch and YouTube, join our Discord. We have conversations like this on a daily basis. We have a lot of talented people here who also have different styles of investing and trading, and we like to bounce ideas with you. For those of you who want to take a look at my charts and what I look at and what data I'm looking at throughout the day, I will leave my Twitch stream running as always. I'll post the videos in the wiretap tapes section of our Discord pretty soon in the next 10-15 minutes here so that you can watch the recordings. Stay safe out there. Stay patient. Look at the data. Look at the big picture. Look at our indicators. Breathe. Okay. We will get through this. It is a challenging market, but there's still opportunities for us to profit. Okay. Hope you have a wonderful day, and hopefully I get to see you guys later on today when I hang out in Discord. Okay. See you guys.